Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time. This week, guys, we're going to be talking about the 3-bar play and average trading range, which I call the forgotten trade killer. A lot of people are taking trades that they have no business taking because the stock is 400% of ATR, and you're buying the high of the day expecting it to go higher. You ever see a stock that's up like 8 bars in a row and you're like, who's buying the high of that? Well, some of the people in today's lecture are buying the high of those things. So it's a really good lecture to keep you out of bad trades. And also I'm going to show you what good trades look for, what you should be looking for to be the best trader you can possibly be. And also there's a couple of trades in there that I took today that you'll get to see, and a couple questions and comments people asked today that I answered. So it's a little bit of everything. I think it's a solid lecture that will help you become a better trader. If you like these videos, please click that like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is the 3-bar play and ATR, the forgotten trade killer. And you're thinking, what does that actually mean? Well, ATR stands for average trading range, which we'll discuss in just a minute. But there's a lot of factors that go into good trading, right? A lot. Whether it's bottoming tails, topping tails, market timing, relative strength, relative weakness, volume, spike, support, resistance, blah, 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 blah. Average trading range is one that honestly gets overlooked quite a bit. So today we're going to do a twofold lecture. We're going to talk about average trading range. We're going to talk about 3-bar plays a little. We'll talk about some other plays too, but where people are making their mistakes. And it was great because, well, right before the lecture, we saw a couple people in the chat room ask questions, not knowing what the lecture topic was, ask questions about this very, very topic. So I've included those at the end of the lecture, so we can talk about those, because clearly I got to be close to the target. Why? Because 2 people asked that question and they made that mistake today. All right. So anyway, let's dig in. But before we get into the lecture, let's talk about when will the insanity stop? All right. Answer: never. Minus $138,000. YOLO is not a strategy. You guys were right. Lost all 138,000 selling calls on Tesla. Ouch. 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 Yeah, that's ugly, guys. Risk level. I've never seen this before. Risk level, at risk. Just read that. Risk level, at risk. Market value, $1.828 million. Cash balance, $1.816 million. That's not good. That's not good. Yeah, I mean, that's true. You only lose once. That's a good way to put it, Ali. You only lose once. So, yeah, that's true. It just depends on how much you lose when you lose. But $138,000. The worst part is, clearly this person was warned because they said, you guys were right. Which means or leads me to believe that someone must have said something to this person in the effect of, don't do that. And they did it anyway. So I know a lot of us have to learn the hard way, which is through personal experience. We all have a little bit of that teenager in us where we don't listen to our parents, right? And they're like, hey, don't do that. I'm trying to help you through experience, but we don't listen. But guys, as you know, I put these up every week. Why? So that you can learn from other people's mistakes and save yourself a lot of money. I'll say it one more time. So you can learn from other people's pain and mistakes to save yourself a lot of money. All right? So I hope that that's the impact that it's having. But that's this week's When Will the Insanity Stop? And I hope this person somehow recovers, but it's pretty ugly. So let's dig in. Average trading range. This is the average daily amount in dollars that a stock trades from 9:30 Eastern until 4 p.m. Eastern. That's the market hours over a period of time, days, weeks, months, right? And that days, weeks, months can change. You could say, hey, what's the ATR for the last year? What's the ATR for the last week? Whatever, right? Example, if XYZ stock opens at $49 at 9:30 and closes at $51.35 at 4 p.m., we would say that today's trading range for XYZ was $2.35. However, the range of one day is not necessarily indicative of the average range over, say, 20 or 30 days. This is where ATR comes into play, all right? But the question then becomes, why should we even care, right? Why should we even care about ATR? The reason is because it matters. Then the question is, well, why will it matter? We're going to get into why, all right? So let's just take a quick look, all right? I think you get the basic idea of what ATR is. The range of stock trades from 9:30 to 4 p.m. over a period of time. And that period of time is malleable. You can change the period of time, but it gives us a general idea of what we can expect that stock to trade today in range, okay? All right. Average true range, from my understanding, Kirk, is the yesterday's close through today. So if the stock has a gap up, it might be $8 of range when the stock really only does $2 of range from 9:30 to 4 p.m. So anyway, the point, though, that we're getting at is you want to know generally or roughly speaking how much a stock trades each day. Okay, it matters to us, and we're going to see here why in a second. But before we get into the details of why, okay, this is just a basic chart of any stock. Doesn't matter what the stock is. And you say, well, what is the ATR of this stock? So you guys take a quick look at this. And the reason I chose this stock is it's got a multitude of different days in it, right? Not a lot of stocks have this many wide range bars in it. So you'll note there's some kind of average range bars in here. There's a couple narrow range bars. There's some of these bigger gaps with wide range bars, right? 1, 2, 3, 4, 5, 6, 7, 8. I don't know. There's like 15, 20 wide range bars in here. But if you had to just eyeball this, I know you're not actually clicking on it, but if you could just eyeball it up, all right, what would you guess is the ATR of this? I'm just asking you to eyeball it up. I'm not asking you to, get an exact penny here. If you could just eyeball it up, what would you say is a reasonable ATR on this? Yeah, I would agree with you. You're looking at somewhere in that $2 range, maybe $2.50, somewhere around there. Again, we're not expected to get this perfect because we can't click on the bars and you don't have the indicator that tells you, but something like that, $2 to $3, $2.50. There's obviously wide range days we know are about 5, right? We can see that on super wide range days it's about 5. Okay. There's also days where we can see it does maybe $1, $1.50. But if you were to take all of the information and put it together, you're probably looking at $2 to $3. Okay, cool. I'm not asking for pennies. It doesn't matter. Okay, because every day is not the exact same penny. It's not $2.37 because it's never going to be exactly that anyway. All right, so $2 to $3. Fair enough. Okay, we'll get to it. Don't worry. Like I said, we're on slide 5, and we have about 30 more to go through. So there's a lot of slides, so some of them I'm going to go through quickly. Now, what patterns are most affected by average trading range? This is a trick question, but not really exactly. In one way or another, all patterns are affected. This is true. All patterns are somewhat affected by ATR. Okay. However, some patterns are more affected than others, namely breakouts, breakdowns, and 3 and 4 bar plays. Okay. Why would you guys say those patterns are most affected by ATR? Why do you guys think those patterns are most affected by ATR? Brian says entries at the high or low of the day. That's absolutely a factor. Yep. There are momentum trades. Okay. They're asking to extend the range. Ooh, yes. Good. So you guys are on point. I like it. They happen at the high or low of the day. Okay, they're momentum plays, and we're asking them, as Steve O said, to extend the range. We're literally asking the stock to go, we need you to go higher because we're buying you at the high, so clearly we want you to go higher. Okay, so average trading range for those is a very important consideration, all right? Very important consideration. Whereas if you take a buy setup, you're not actually buying the high of the day, right? You're buying something, and we can just do this very quickly. Whoops, insert right here. We'll just do it super, super quick, okay? Right, if you take this, and we'll just do this, okay, and you do this with it. I know it's sloppy, I'm just doing it quickly. And you take it down here, right? You're not really, by the time you get back to the high, there's still some range left, right? By the time you get back to the high, you still have a little bit of working range to go without increasing the ATR. So you might be able to get to 1R or 2R without increasing the ATR on a buy setup. That's impossible. Impossible on a high of the day breakout. If you're on a high of the day breakout, by definition, you need the ATR to increase. All right, maybe not the average trading range, but you need today's range, whatever it is so far, you need that to increase, okay, to get to your target. So you can see, by definition, it's a little bit more important on 3-bar plays and breakouts. Now, keep going. Buying the high of the day on a breakout or 3-bar play by definition means you need the stock to move higher in order to get your target, okay? So if you buy the high of the day and the stock has already exceeded its ATR, then we're asking the stop to do something unusual, and this is the key, all right? That right there, okay? If you buy the high of the day on a stock that has already exceeded ATR, you're asking it to do something it doesn't do that often, or something it does less frequently. Okay, now, like I said, ATR is kind of the average, so you'll have days it goes above it, days it goes below it. But then the question is, by how much? Are we asking it to break the ATR by a nickel or by $3? There's a difference there, right? So, i.e., we're asking more of it than we normally would. It's not that it can't or won't go higher, but being odds traders, we are entering an area of decreased odds. And again, that's from an ATR only perspective. We're not factoring in other things, and we'll see that here in a minute. But just from a pure ATR perspective, as the higher up we go, the less likely it continues to go, right? That's statistically true for most things, right? The higher up you go, the less likely it's going to continue forever and ever and ever and ever. At some point, it gets to a point where it's like, whoa, the air up here is thin, and I can't breathe anymore, right? So FOMO traders beware, okay? FOMO traders beware. So the point, though, is take ATR into consideration on every trade, all right? Especially if you're taking high of the day trades or breakout trades, et cetera, and so forth. So ATR exceptions. Level 1 and level 2 gaps typically exceed their ATR, typically. But by how much? That's the $64,000 question. That means it's a question I don't know the answer to, okay? It's like talking to my wife. I don't know, right? So when I see a level 1 or level 2 gap, I am expecting ATR to be exceeded. I just don't know by how much. Will it exceed by 50%? Will it exceed by 300%? Don't know. And that is where things get a little sticky, okay? Because we really don't know. Obviously, market conditions matter as well. When the market's having a monster, power trend day, you're probably going to exceed ATR on the stocks you're looking at as well. So there's certainly factors that come into play here. So as a general rule, do not take a high of the day breakout or 3-bar play if the ATR has already been met or exceeded, unless it's a level 1 or level 2 gap. But even these have limits. Despite it being a level 1 or level 2 gap, if the stock has gone 2 or 3 times its ATR, then it's usually a good idea to stay away, right? So even with a level 1 or level 2 gap, okay, if you're up 200%, let's say the average trading range is $2 and you're up $4 today. You want to take a high of the day breakout? That's tough. It could go $6. Could. The odds are just starting to go against you a little bit there. Okay, so all of these things matter quite a bit. when it comes to taking 3-bar plays and breakouts, particularly if they're near the high of the day. So if you're not keeping ATR in mind, you're doing yourself a disservice. The beauty of ATR is that it's a very easy thing to do. You can either get an indicator that gives it to you, or you can just pan over a few bars and take a look at it, right? It's pretty easy. But now is when, is that there or there? Huh. Anyway, sorry, I'm just looking at something. I got ahead of myself. I was looking at something. Anyway, if a trade works, does that make it a good trade? If a trade works, yes or no? Does that make it a good trade? Come on now. You got this one. No. Anybody answers yes to that is, you bumped your head today. If a trade works, doesn't mean it's a good trade. And if a trade doesn't work, it doesn't mean it's a bad trade, right? Sometimes good patterns fail, and sometimes, unfortunately, no. Sometimes, bad trades work, okay? So let's take a look for a second. Why did this fail? It's below support. It's a tradable void below a wide range igniting bar. There's a volume spike on bar number 1, narrow range resting bar in bar number 2, and it's near a whole number. I mean, when you think about the textbook, this checks a lot of boxes. I mean, the green line is support. It's got a wide range igniting bar. It does, okay? It's got a nice volume spike on the first bar of the day. I mean, it's got a narrow range resting bar. It's in the lower 50% of the range, right? This bar is from roughly 160 up to like 162.70 or something like that. So like $2.70. This bar is only $1, so it's in that lower 40%, okay? It's near a whole number. I mean, like, if you're a newbie trader, you're a novice trader, you're just checking the boxes. You're like, well, it's below support. Oh, wow, it's a tradable void. Oh, my gosh, it's a wide range. Oh, my gosh. I mean, you're just going, this trade is getting better and better and better the longer I look at it. But then you take a look to the left. What is the average trading range of this stock? I mean, granted, it's only one day. But I'm trying to make a point here. I should have put the daily on here, right? I mean, this stock, granted, again, it's only like one day's worth of information. I understand. But you're taking a look at this and you're like, damn, this stock does like 30 cents on each bar, right? The average trading range of this stock might be $2 a day. Like call 165 the high and call 163 the low. You have like a $2 range on this thing, okay? And now it's done $2.70 in 5 minutes. That's tough, right? That's tough. So if the entire day's ATR is $2, give or take, but 5 minutes into the day, it's done $2.70, and you want to short the low at 160 with a stop at 161. That's challenging. Now, I don't know what the gap is on this. It could be a level 1 gap potentially, but probably not. Why? Because I can see where it closed and where it opened today. And the likelihood that this is a wide range green bar that it's gapping under, no. So it's not a level 1 gap, okay? My point, though, is this: if you just looked at this in a vacuum, you'd probably look at it and go, that's pretty nice. And it is pretty nice until you look at the other information around you, such as ATR. Let's continue. Okay. So take a look at this. All right. We already talked about ATR earlier. You guys remember this slide. Okay. $2 to $3 is what we kind of looked at, right? When we looked at this one earlier. Okay. So just burn it in your memory. Burn it in your mind. Okay. Now, here's that same stock with a pattern. I don't know. Maybe. So same stock on the daily chart that I said, burn it into your mind. Burn it into your mind. Okay. And now we have a gap down, which you can see over here, right? You can see it over here. Gapping under a green bar, under a pivot, under a couple more green bars. And it has room down to the green line. It does. It has room down to the green line. So let me ask you this real quick. The initial gap, generally speaking, I'm not asking you for minutia, generally speaking, yes or no, you like it or don't like it. At the initial gap, forget about the lower time, just the daily chart, the initial gap. Do you like it or not like it? Yes, I like it. No, I don't like it. Just as a general comment. Yes or no, I like it, I don't like it. I would say as a general comment, it's solid. This is pretty good, right? I mean, you have a stock here that was kind of choppy in a sideways, maybe stage 3, who knows, but you're taking out a little green bar, a little pivot, right? And generally decent, right? It's not the best gap we've ever seen, but it's certainly not that bad, okay? And we're clearing a lot of things. There might be a little hiccup right there, something like that at 116, but generally not too bad, okay? Not too bad. So we look at that and go, okay, given this little, maybe I can blow this up just a little bit here, okay? Hold on, give me 1 second. I'm taking screenshots out the wazoo today. Whoops. Let's try it now. Sorry. Why am I doing this? So we can just pull it up. That's the gap we're looking at. Okay, we'll do this one in green. So when you take a look at that, you basically need to get under there. Okay, let's make that like pink so you guys can see it. You basically need to get under that. That's pretty good, right? That's not bad. So let's call that 116. All right, because this dotted line is 115. So let's call that 116. And then when you do, smooth move up means you have room back to that area. So let's get rid of this. Okay, back to the slide. Now, after you get through that little tiny pivot we just looked at, you have room down to the green line. So we call it 116, something like that. Well, it opens right there. And then it goes $6. $6 on the first 5 minutes of the day. You guys just told me that the general ATR here is 2 to 3. And we also notated that a really good day was about 5, right? We notated on the wide range bars that a really good day was about 5. This did 6 in 5 minutes. What does that tell you? Most likely, stock is not going lower. Like there's like a 90+% chance this stock isn't going lower. And if it does go lower, probably not significantly, right? Probably not significantly. It's done a monster move. Again, we already looked at the chart. We know 2 to 3 is average, 5 to 6 is monster move. It does 6. So how does that help or hurt me? Well, it does 2 things for me. It helps me not take this thing at 112, right? It helps me not short it at 112. But it might also help me nibble some long at 112. Now, for new traders, I wouldn't do that. But if you're an experienced trader and you're like, damn, the biggest day I have ever seen on this stock is $5 and today it did 6, and you buy the low of the day, you might be able to give it a $2 or $3 stop loss and nibble a $2 to $3 bounce. Okay? Now, again, number one and most important, I'm not going to short it at 112. That's no way. No way. But if it gives me a clean double bottom retest with maybe a bottoming tail, now you're looking at it going, this is the biggest day I've ever seen, and if I buy the low and give it $2, there's a very good chance I might be able to scalp this thing. I'm not expecting it to go back to 116, but you might get $1 or $2 from that bounce. So you can see 2 ways here. One keeps you out of a bad trade, and another one might, and I use that word strongly here, might get you into a long play. Not on this particular pattern, but it might. Okay? So ATR was a big deal here. Now let's take a look again. Now, we have a stock, 1, 2, 3, 4, 5, 6, 7 bars up, monster gap. The gap goes from like, I don't know, 87 up to like 97, give or take. 87 to 96, whatever. It's like an $8 or $9 gap. Okay? What do you guys think about this entry right here? Wide bar, narrow bar, and maybe a trigger bar, maybe. What's the problem here? There's an answer. It begins with an E and it ends with a Y. What's the problem here? The answer is everything. Everything is the problem here. Okay? The stock is way too extended. 2, 4, 6, 7, 8 bars up. Okay? Not only is it 8 bars up, the 8th bar happens to be a pretty large gap. Then on top of the 8th bar up being a large gap, the first bar of the day is a wide range bar that's about $5. Now, again, go back, look at the daily ATR, look at the daily ATR. Is the ATR $5 on this stock? I would say resoundingly no. There are 2 or 3 days, right? 1, 2, 3 days where it's done $5 or more, right? There's 1, 2, maybe 3 here, where it's done $5, $6. Great. 3 out of the last 1, 2, 3, 4, 5, 6 months. So out of the last 120 trading days, it has had 3 days that have exceeded $5, 3 times. So you're looking at like a 2% chance, 98% chance it's not going to exceed it. Oh, and wait. And today it did it again. So this would be the 4th day out of the last 120, okay? And it's already gone $5. 8 days up, monster gap, exceeded its ATR by double, so it's already up 200%. And the biggest day we've ever seen on this thing's about $8 or $9 right there. This would basically have to be, to make this trade work, because now, remember, you're looking at an entry at like 101.50 and a stop at like 98.50. So you're looking at a $3 stop loss. To make this trade work to 2R, this stock would have to have the largest day it's ever had. Ever. What are the odds of that happening? 8 days up, monster gap, buying the high of the monster gap, buying the high of a 200% ATR, and you still need $6 more. So this stock basically on that day will have to do 400% of ATR for you to hit 2R. Now, for me and for many of you, this is obvious. This is kid stuff. This is like kindergarten, preschool stuff. But there are people in here who take this stuff every day, all the time. Point is, I want you to break it down systematically. 1, it's up too much on the daily. That's a big negative. 2, the gap is likely too large. That's another big negative. 3, it's exceeded its ATR by double, right? That's 3. 4, it would need a $3 stop for 1R and a $6 target for 2R, making it the largest day in the history of this company. Now, I'm exaggerating, obviously. I only have 6 months of data, but you get the point I'm making. It would be one of the largest days this stock has ever done. After 8 days up, after exceeding its ATR. It's an obvious no. But there are some traders go, but Jared, wide range bar, narrow range bar, blast off. YOLO. Done. The answer is no. Very resounding no. Okay? No. So, let's move on. Now, you take a look. I put these arrows here on purpose. It's the same exact chart you just saw. Same chart you just saw. Should you take, I should say, these 3-bar plays? Okay? Should you take these daily 3-bar plays? They never triggered. Well, one kind of triggered, right? One was borderline. It kind of peekabooed over. But my question is, are they 3-bar plays you should take? I'll wait. See what you guys think. Note the hesitancy of people to answer. There's some uncertainty. You see, earlier when I asked an easier question, you guys were like, no, absolutely not. No, 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 no. Now people are thinking about it. Like, yeah, but it is a daily chart. And 3-bar plays are supposed to have a wide range bar. And a wide range bar by definition is an above average bar. And both of these bars are above average, et cetera, et cetera, et cetera, et cetera, right? So you guys are really going through this in your mind. So this is how I look at it. The first possible 3-bar play, it does peekaboo over a little bit, right? It does kind of put in a higher high. The first one isn't terrible, right? It's not terrible. You're gapping over 1, 2, 3, 4, 5 red bars, okay? And the bar itself, after the gap, takes out another pivot. So you're taking out 2 pivots and a lot of red bars. But we're not really in an uptrend. We could be transitioning, right? We're not really in an uptrend, but we could be transitioning. So this one, I would say with a little bit of rest, like right here, see how it rests for 2 or 3 more days? I would say that might be acceptable over here, but then it gaps down, right? So that might be acceptable here. But this, no. I don't care if it's red, you're still up couple 2-3 days, and you put in a monster wide range bar, and you're going to need some rest. That capitulation, you need a stock to just hang out and relax for a little bit, okay? So the first one, I could argue, not too bad. The second one is just a little too much. It's a $10 bar. That's 4 times ATR. That's like an extreme wide range bar, a super wide range bar. I don't want to buy that after 1 resting day. The odds of this thing going higher on the 3rd day are unlikely. And if it does, it's probably a peekaboo that fails. So no. First one, okay, decent. Big volume spike as well. Second one, not for me. All right, let's move on. I already have the slide made, Sophia. I already have it made. Okay. Understand what trading is. This was a nice 15-minute 3-bar play. Not all trades work, but they don't need to. And that's why we have stop losses. The point, though, is here's a wide range bar. Okay? Peekabooed, and there's the stop loss. But what do we have here? Right? If I move this down, let's move it down for a second. That's 355, so let's call it 357.50. Okay? Let's call it like kind of right in the middle. So 357.50. By 365, $7.50. $7.50. What's an ATR for this? Well, we only have 1, 2, 3, 4, 5, 6, 7, 8 days to look at. But this day is about $5 or $6. This day, 45 is like about $7. This day is about... So other than this 340 to 360 day, during this period, the ATR looks to be somewhere in the $7 range, maybe 10 on the high side, right? Maybe 10 on the high side. So while this is a wide range igniting bar on volume, and it's quite pretty, over a double top, range could be a concern here. You know, range could be a concern. I took it, ended up losing $20 on it. This was a $2.25 stop loss, which means I needed $4.50 to make this work. Well, $7.50 plus 4 something, $4.50. I need a $12 move. $12 move is above average for this stock, right? At least from what we're seeing, right, over the last 7 days. There is one day in here that was monstrous. It was like $20. Okay, got it. But the rest of the days are about $5 to $10. Call it 7 or 8. This makes this a little challenging. Why did I put this on here? Because it's a real trade that I took. Now, does this mean we have to say no to this? Maybe, right? The answer is it depends. Are you looking for 2 or 3R? Do you raise your stop? Do you not raise your stop? What are the market conditions? Is this, for example, is this showing extreme relative strength to the market and the market's about to pivot higher? Maybe this is worth it. It's hit 1 ATR, and you might say, well, I go to break even at 1R. I'm not justifying this. I'm simply saying there might be a scenario in which this is acceptable. Okay? There might not be. Brandon, this slide is like 2 years old, my man. Okay, so, you know, you got to go back and take a look at it during this time period. So the point that I'm making is there will be times, as is always the case in trading, that it'll put you to a decision. It'll put you to a difficult decision. Should I or shouldn't I? It's right on the precipice. It's right on the cusp of it could go another $1 pretty easy or $2 pretty easy, right? So more information is needed, but you can certainly argue, right? You could certainly argue that this was a difficult trade. While the pattern was pretty, breaking above a double top, wide range bar volume, you could make this argument. But you could also make the argument that it was at 100% of ATR. You could argue that's why it failed. Or you could argue the market tanked. It's hard to say. I have to go back and look. Okay. Now, this is where we need to go a little bit quickly. I have 1, 2, wow, there's a lot of these. Holy shit. More than I thought. I told you guys, I got a lot of slides today. We got to get moving here. Rate these 3-bar plays from 1 to 10. 10 is the best. All right? Rate these 3-bar plays. All right? I probably should have put 1 per slide. I don't know why I put 2 per slide. Okay? So let's go to this one right here. Quickly. Rate this as a 3-bar play. No, I'm not trying to trick you. I am not trying to trick you. Okay? I'm just showing you charts. I'll tell you what afterwards in a second why I chose these charts. Okay? I'll tell you afterwards why I chose these charts. Okay. All right. Wow. Really? That few of you have the stones? Okay. 1, 2, 3. Next. Okay? This one right here. The second slide on the right. Second slide on the right. Okay? All right. Okay, cool beans. Wow, that's a lot of zeros, Loveless. All right. Now, there's the line. Next slide. Okay, hold on. Right here. Right here, first slide. First slide. $1,709. Wow, that is some definite divergence in commentary. 1, a 7, a 0, and a 9. Wow. Okay. Interesting. All right. All right. And this one on the right. Short. 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 Antoine's like, huh? Oh, there's a method to my madness. Don't worry. Just humor me, okay? Just humor me. All right, good? All right, let's stop that one there. Okay. Right here on the left. Right here on the left slide here. Red bar, green bar. We have minus zeros to 4 and 5s. You want me to move that over just a little bit so you can't, there you go, so you can't see it, there you go. Okay, all right, let's be done with that one. Okay, this one over here on the right, this one over here on the right. I'm going to have to cut this one a little short. I have just way too many of these. Literally, I have like 6 more slides of these. So maybe we'll do like 2 more slides of these, okay? We'll do like 2 more slides of these, all right? Because I have too many. Okay. All right. Short, okay? Short on the left here, right there. short. Wow. Okay. Interesting. A few very interesting responses. All right. On the right-hand side here. Right there. Interesting. I mean, very interesting responses from some people. Okay. All right, so we just went through 2, 4, 6, 8. We went through 8 slides. Okay? 8. And yeah, I'm going to leave it at that. I literally have too many slides left. So I think 8's enough. All right, I think 8 slides, 2, 4, 6, 8. Yeah, that's enough. Okay. So every one of those, Jordan alluded to it, every single one of those, including 2, 4, 6, 8 more. I have 16 of these. All right, I have 4 more slides of these. So I have 16 total charts. Every single one of these was asked in the chat room. Every single one. Okay? I took pictures of them, and they're under my title. I have a file folder for all patterns. I have a breakout folder, a buy setup folder. These are labeled not 3-bar plays. Every one of them was labeled not 3-bar plays. So if you answered more than a 1 or a 2 for any one of these, the doctor check is in order. Okay? Every one of them, Brandon, was asked in the chat room. Okay, over the years. Every one of them. And again, I have probably 30 more of these. I take pictures. You guys don't even know about it sometimes. Somebody will ask me a question about a trade. I'll just take a picture of it, file it away. Thousands and thousands, probably over 10,000 slides. I'm not kidding. All right? So any one of you that was answering 5 or an 8 or a 7, let's learn something real quickly here. Okay. Right out of the textbook. 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 What book is it out of? The textbook. What's that textbook? Professional Trading Strategies. This one. Okay? That one. That one. That one. All right? Well, bar number 1 must be a wide range bar. Okay? Wide range bar. Igniting a move. It's underlined. It's bolded. It's capitalized. And it's italicized. I couldn't do much more than that. Igniting bar means the first or second bar of a move. This is very important. Wide range bar means double the size of an average bar. Okay? This bar should have increased volume but not required. Bar 2 and 3 must be in the upper 50% of bar 1's range and have relatively equal highs. Bar 1, 2, 3 should have similar highs. Bar 3 and 4 is the trigger. Depends if it's a 3 or 4 bar play. Entry and expansion bar. The stop loss goes under the lowest bar. Okay, and I want to double check something because I don't remember if this is the full-on one because I added to this in the newer version of PTS, which is like 3 or 4 years old now. Let's give me 1 second. I just want to double check something really fast. Triangles. Hold on 1 second, guys. There it is. Yep. For those of you who have taken the newer PTS, this is the older version. I have added, okay? These don't work as well coming from buy setups or retests. Make sure the average trading range of the stock has not been exceeded before entry. This is what's added in the newer PTS. Anything after 2021, okay? And I added more to the second and the third as well on this. So I just wanted to make that clear. You can see it here for those of you who have taken it. All right. I added a couple caveats, okay, to this. The newer one's still 3 years old, Gene. But I added it because I got tired of getting certain questions from folks. But anyway, so you have a wide range bar, narrow range bar, and blast off. And over here, wide range bar, 2 narrow range bars, then blast off. And the bar, and also the color of bar number 1 doesn't really matter that much to me. It can be a bottoming tail. I know you guys don't see it, Brent, okay? It's like 3 years old. 2021 is when I did it. It's literally 2 months. So I think it was May of 21, maybe, or maybe it was September. May or September, I don't remember. But anyway, so I added a couple caveats because people thought that bar number 1 had to be green on a long and it had to be red on a short, and it doesn't really, okay? So the point I'm making is use those rules to your favor, okay? Use those rules to your favor. So for example, here's a trade on UNH. The stock gaps down to 266. All right, gaps down to 266 under support, and there's all this void below. All right, so wide bar, and there's your 4-bar play. 265 by 265.75, and the stock drops, I don't know, $3, $3.75. Okay, so again, take them by the textbook, all right? I guess I used a slightly tighter stop or whatever because I called 265 by 266 in the room, target area 263, all right? I'm going to go through these quickly because there's a couple other things I want to get through, all right? Here's an example of a stock that gapped from like 112 down to like 102. So that's a bit of a big gap, but it's still in the range, right? 10, 12%, but it gapped under a wide range green bar, and total 1, 2, 3, 4, 5, 6, 7, 8 green bars in a row. 8 green bars in a row. This thing gapped under and gapped to here. Didn't have a ton of room. There was a little pivot just under 100 and run at 98. Okay, right there. This, I blew it up right here in the middle. See in the middle of your screen, that is a wide range bar with a topping tail, a narrow range doji bar. It triggers and then just goes lower, right? It's an incredible gap with tremendous amounts of shock value and a perfect 5-minute 3-bar play. It's really textbook. You get in at 100.50, your stop's 101.50, and then you're trying to get like $2. Why is that important? Because the $2 target you need is 98.50. 98.50 puts you right at support, just right to $98. So you're trying to get a target that's acceptable because it's near or around the area of support. If you needed a target of, say, $96, that might be a problem here, right? Unless you go to break even, that might be a problem. And again, I blew this up in the middle so you can kind of see what it actually looks like right there, all right? That's a good 3-bar play. Here's another example. You guys have seen this one. This one's in the textbook. It's literally in the textbook, okay? Here's a daily breakout. See the little bottoming tail in the daily? That's what sells you on this thing. That bottoming tail on the daily, it's got a kind of 2, 4, 5, 6, or 7 day consolidation. It gaps just above 46. Wide range bar, it's like 20, 30 cents. Narrow range bar, you're in at 46.21. The stop's 46.09. Rip. Okay? $4,000 on this trade. It netted $4,000 on only a $500 risk. That's a great play. Higher time frame matched with the lower time frame. But the ATR is not exceeded. The first bar of the day isn't crazy big. It's a large bar, but it's not stupid crazy big. On a stock that does about $1 in ATR a day, I can handle a 40-cent range, especially when my stop loss is only 12 cents. If I have another 60 cents to go and my stop loss is 12, even if I make it a 20-cent stop loss, it's still 3 to 1. And that's what this stock did. It went another $1 or so. Okay, now, what's the flip side? What's the flip side? This shit. This garbage. And yet, you want to bet that if I put this in the questions earlier, remember I said rate this trade, some of you would be calling this a 7 out of 10. 100% there'd be a 2 or 3 of you in here calling this a 7 out of 10. You're not going to short it into support, but here's the point of showing you this slide specifically. It works. It works. Let's say the entry is 257.50. It's right in the middle of the range. The entry is 257.50, and let's say the stop loss is 258.50. It's $1 stop loss, okay? This stock dropped to 256.50. It went 1R, right? But look what you're shorting into. You're shorting this thing right into support right here, and then the support just keeps getting deeper and deeper down to 256. This is not something you should trade. I wouldn't trade it. But some of you in here would think, oh, this looks decent. Why? Oh, red bar, green bar. Wide red bar, narrow green bar. I should trade it. Okay, I should trade it. Right, sitting on support. Don't you guys listen to Beyonce? To the left, and you look to the left, you're like, oh, shit. It's sitting on it. It's just sitting on it. Okay, let's try it again. Okay. What about this? Wide range bar, undeniable wide range bar. Narrow range bar, it's not really narrow range, but for how big the first bar is, the second bar is kind of narrow range. And you're going to short this thing at like $2.50, right into a pivot support and right into this. Wow. People will do it. People will do it every single day. Wide range bar, narrow range. Oh yeah, let's just short it. Why? Oh, it's a 3-bar. So you don't care about ATR. You don't care about location. You don't care about support or resistance. No, apparently some people don't. Now, this is what you trade. A stock that gaps under support, right? Takes this out, okay? Wide range bar, comparatively speaking. Narrow range resting bar. You're in at 194.60. Your stop's 195.40. And tumble. That's what you short. The stock that has nothing to the left. It hasn't grossly exceeded its range, okay? And it tumbles down to, what, 191? I mean, this thing went $4 on an 80-cent stop loss, okay? Now, this was today, right? This was today on Tesla, right? We took a wide range igniting bar, narrow range resting bar with a bottoming tail, 195.40 by 193.40. But there was a concern on this trade today. There was a big concern on this trade today, okay? And this was it. I was very concerned about this. Here we go. Take a look at Tesla. Have a good look at it. This is the pre-market chart. This is the pre-market chart of Tesla. And then, wham, right off the open. It goes from like 190, 170, 190, 150 right here, all the way to 195, straight up, straight up. Why do I notate 195.40? Because this is roughly the area we took it. Probably up a little bit more than that, actually, right? Probably right there. I took this thing at 195.40. After this was a difficult decision for me on Tesla. So I go back and I look at this. When you look at this in a vacuum, there's really nothing wrong with it, right? You're taking a look at it in a vacuum, like, wow, wide range bar, narrow range bar, bottoming tail bar, decent area. Tesla was showing really good strength to the market, et cetera, et cetera, et cetera. You see the first 2 minutes, the first 5 minutes, 4 minutes of the SPY were red, red. Tesla was green, green. So as soon as the market went green, Tesla shot up. That's exactly what we wanted to happen. But I had a very difficult time wrapping my head around this. Okay? Well, how quickly it made the $4 move. The average trading range here, Jeff, was not a concern. Right? The average trading range of Tesla is more than $4. That's not the issue. It's how quickly it moved. And then you start looking at it. Remember what I said to you guys? Oh my gosh. Right? Oh my gosh. This thing needs a pullback. But we're so close to target. In fact, do I have that in here? I think I do. I do. And then this happened. Okay? Hold on. Give me 1 second. Let's bring this up huge. This right here happened. It literally, hold on, let me blow this up. Man, I'm snipping all day today. Right there. Sorry about that, guys. I apologize for that little mess I just made, but it's all good. Okay. Then this happened. Okay. Give it a second. There you go. It literally hit my target. It hit my target, printed 300 shares, and pulled back $1, like $1.20. And I thought, oh, shit. Right? That's a tough one for me because for me, it actually hit my target. I was trying to get $5,000. That's my target. So what did I have to do at that time, guys? I had to go to break even, right? I had to go to break even. So I'm thinking to myself, son of a gun, I don't have a lot of protection because, let's go back, in my mind, Tesla needed a pullback because I'm not looking at it from our entry. I'm looking at it from the low of the pre-market, right? I'm looking at it from the low of the pre-market. So when I see this thing pull back, I'm thinking, well, gosh, 195.40 is kind of exactly, that 50. Well, actually, this is a little bit late. It went up to right here, something like that, right here. Okay? Right there. See it? Right there. And then it pulled all the way back to 196. Right there, that little doji red bar, right there. Then it pulled back to 196, and I'm like, oh my gosh. I only have about 50 or 60 cents of protection. It's going to tag mid even and bounce. Thankfully, it didn't. But I don't know about you guys, but when this happened, I'm just telling you the truth. When this happened, I got out of my desk and I took a walk. I took like a 2-minute walk. I said, you son of a bitch. Everything was set. My bracket was set. But I'm looking at it going, you've got to be kidding me. It hit my actual target and didn't fill me. But thankfully, it ultimately went past that area. And you can see it up here. It went to like 198.50 or it went to like 199 something. It actually went 2R. So I was okay with it. Now, I want to talk about 2 more things before we call this a day, before we wrap this up. This was something that somebody meant. Somebody asked a question about right before the lecture, like 15 minutes, 10 minutes before the lecture. Okay? Well, if you look to the left in a vacuum, what do you see? Look to the left in a vacuum, and what do you see? You see a reasonable 3-bar play. Wide bar, narrow bar, and it worked, right? The entry is like, I don't know, 133, 134, something like that. Okay? And your stop loss is like 131. Literally, take a look at it, guys. Really, take a look at it. You're looking at about a 134-ish entry right here. Okay, right there. And about a 131 stop, a $3 stop loss. The first bar of the day happens to be 129 to 134, $5. Guys, what's the ATR of Garmin? Take a look at the chart. You can see the chart. What's the ATR of Garmin? Talk to me. Just take a look. Somebody can actually pull it up right now if they want. What's the ATR of Garmin? Jordan. What's the ATR of Garmin? You guys put it in earlier today. We already talked about it. I can tell you right now. You guys already talked. You already told me what it is. Roughly $2. Roughly. Depends on how far out you want to go. Okay? So, Garmin's average trading range is, call it $2. All right. I think we can all agree that the gap on Garmin was pretty nice. Yes, it gapped from a green bar, but it also gapped over this pivot, and this pivot. So the gap on Garmin was solid. There's nothing really wrong with this gap. You know, it closed yesterday at like 122 or something, and it gapped up to 130, so an $8 gap. It was like a 7% gap, right? It was like a 7% gap. Not bad. I like the gap. I do. What's Garmin do? First 5-minute bar of the day, it doubles its ATR. If the ATR is roughly $2, and the first bar of the day is 4. Technically speaking, the first bar of the day is 5. All right, this is 129 to 134. So the first bar of the day is 250% of ATR. 250% of ATR. And we already discussed that if you take this, Your entry is roughly 134 by 131, $3 stop loss. So now you're already at 250% of ATR, and you need $3 more to go 1R and $6 more to go 2R. So now you need what? Another 150% of ATR. So you need 400% of ATR basically to get your target here. Right? You're going to need a stock today. You're going to need this stock to go 5 plus 6. You need to go $11. $11 basically to hit a 2R target on a stock that averages $2 a day. I'm going to repeat that. Stock has already gone $5. We're using a $3 stop loss. This person used a $2.60 stop loss, so let's use their stop loss. Okay? So we need $5.20 on top of the $5 that's already moved. So we need a $10.20 move on a stock that does $2 a day. 5x ATR you need. And guess what? It did it. It did it. You needed 500% of ATR, and it did it. This, ladies and gentlemen, boys and girls, is not how I would expect to make a living in this business. It's not how I would expect to make a living in this business. You're going to get away with it sometimes. Of course you will. You can get away with just about anything sometimes. It's just not something that I would make a habit of doing. It's a nice gap. I'm not even concerned about the gap. But you're asking a lot. You're basically asking somebody who just ran like a 2-hour marathon to go do it again right after they got back. Okay? And what about this one? Jared, I'm in TDOC, 3-minute breakdown at 10:21. If my plan gives me the option to take 1R, would that be prudent as TDOC is trading above ATR? Well, let's not even get to the question. Let's just look at it first. 1, stock is gapping down, third day down, pretty big gap. So let's just call that $17. I don't know exactly what it is, but it looks like it's just under 17, and there we can kind of tell it's right around 17. It's taking out a pivot. So the gap itself is near support, right? There's a little bit of junk to the left, right? There's also a pivot, double bottom retest. So we have a couple things going against us. We have a stock that just took out multiple pivots. That's good. But in doing so, it's also down 15% at the open, something like that. It gapped from basically 20.50 down to 17. That's a $3.50 gap. And by my calculations in math, that's, 17% gap, something like that. Okay, give or take. All right. So when you look at that, that's tough. You're already down 17. It is a lower priced stock, so we are more flexible with the percentage. It's a lower priced stock, so we're more flexible. Gaps down, and then continues lower. Now remember, this person said at 10:21. Let's go to 10:21 right here. The stock is now down at like $15.70 or something. So, what has happened here? The stock is gapped down huge. Now it's down 20-some%. It's also now what? Basically at ATR, right? I mean, the stock has moved $1.30. And if you look at this, I'm guessing ATR, guys, what's TDOC ATR for those of you who have the indicator? What's the average, if you go the last, 2 months, 3 months, what's the ATR on TDOC each day? $1? A little less than $1, something like that? So Brian says 80 cents. Okay. So we have a stock now, okay, that has exceeded ATR by 20, 30, 40%. A stock that's down over 20% overall. a monster gap, and perhaps possibly the most important part. Hold on. Where's it sitting? Where's it sitting? Pretty much, give or take, at double bottom support. Talk through the trade, guys. The question I have to ask is, how did it ever get past your pre-trade checklist? How did it ever get through your pre-trade checklist? Look, let me be clear. This isn't a stock that's missing one thing out of your checklist. Let's say you have 8 things on your checklist. This isn't a stock that's missing one. Oh, it has 7 out of the 8 things. No, it's missing so many things. The only plausible answer is you don't have a pre-trade checklist. That's the only answer to this question. Hi, my name is Jeff and I don't have a pre-trade checklist. Because there's no way you get to this point. This isn't meant to be mean or rude in any way, shape, or form. It's meant to save you money. How did you get to that point? 20+% down. ATR exceeded. At double bottom retest support. Wow. How do you get to this point? Does that make sense? So it's not, Jeff, it's not you, man. I've done this before. We've all done it. So don't take it, I mean, take it with a grain of salt, because we've all done it. We've all been there. 100% we've all done it. But that's where that checklist comes into play. And I understand, guys, where there's the preponderance to skip it because you're like, I might miss the trade. I might miss the trade. That's okay. Take Ollie's approach. Miss the trade. If you can't get everything done before it triggers. If you can't get through your lists, check off all the boxes before you get there, don't take it. Don't take it. Okay? So when I look at these, right, I look at this, and I look at Garmin, and I think, wow, these were both asked today. And this lecture was done a couple days ago. So yes, it ended up being, in my opinion, an appropriate lecture for today because people are still struggling with this. It happened twice today, right before the lecture, on Garmin and on TDOC, TDOC. Okay? So, with that, remember, trading is a mind F. Don't let it get to you. There are lots of ways to lose, but few ways to win. There's a lot of ways you can FOMO it, YOLO it, diamond hands it, and do every other thing wrong. But keep it simple. Follow your pre-trade checklist. Do what you're supposed to do when you're supposed to do it, and good things will happen, right? And good things will happen. If you don't do those things, you're going to have a very difficult time in this business. And understanding average trading range is a very, very, very important part of being a successful trader in this business. All right, so I hope you guys learned a bit about how to be a better trader, the importance of ATR. I'm Jared Wesley of Live Traders. We'll get back at it again next week.